Hello friends, welcome back. So we wanted to talk about the features of money. And I mentioned that any commodity that is called money anywhere must have all these features. If it lacks these features, then it cannot really be considered as money. So the first feature is that it must be stable in value. That means one Ghana cedi today should be the same as one Ghana cedi tomorrow. That is stable in value. You cannot tell me what one Ghana cedi today cannot buy the same thing in the evening, the same day. If the cedi is behaving that way, then it is no more money. It should be stable in value, though it changes in value with time, but in the immediate it should not be that volatile. Assuming you have one Ghana cedi, you can buy bread in the morning. In the evening, you just realize that, oh, that one Ghana cedi cannot buy the bread. You need 5 Ghana cedis to buy the bread. The next day, you go to the market to buy bread and you are told 5 Ghana cedis cannot buy the bread. You need 100 Ghana cedis to buy the bread. It is not stable in value, so it's no more money. The second is durability. It must be durable. It must not be perishable. So if you have anything in your hand that called money, you put it down and in the next moment the thing is rotten, no, it cannot be considered as money. It must be divisible. Anything considered as money should be you should be able to divide it into smaller denominations. So that is why our cedi, we have coins. We have 20 pesos, 10 pesos, 50 pesos, 1 Ghana cedi. If you have 200 Ghana cedis, you should be able to divide it into smaller denominations. So if you have anything that is used for exchange that cannot be divisible, it cannot be considered as money. And it must be acceptable. It must be acceptable within any jurisdiction and geographical area where it's considered as a legal tender. So if our Ghana cedi here is not accepted, okay, so Ghana cedi in Accra here, if you go to Kumasi and what you hold in your hand is not accepted there, the sellers there tell you, oh, this thing is not accepted in Kumasi, then the Ghana cedi is not really money in Ghana. It must be relatively scarce. Yes, this is very important. Any commodity that is used for exchange which is not scarce is not money at all. Assuming you move outside and all that you are working on is 100 Ghana cedis, 100 Ghana cedis, it is no more money because it is not scarce. Any scarce commodity commands value. If it is not scarce, it will have no value again. So that is it. And it must be identical. Anything accepted as a medium of exchange must be easily identical by must be easily identified by everyone as money. So before the printing of a currency or after a printing of currency, there are a lot of campaigns that are done to make people easily identify the money. So if you take your medium of exchange somewhere and people are unable to identify it as really an acceptable medium of exchange, then that thing is not money. And the last thing is it must be portable. It should be something you can carry with you when you are going somewhere. So if you have something, a commodity you cannot carry with you from Accra to Kumasi, it's too big, it's immovable, you cannot even put it in a car, and you call that money, it is no more money, right? So the last thing, okay, the last thing on money we want to look at is the money demand and the purposes of holding money. There are 3 main purposes of holding money, and these purposes are transactionary, precautionary, and speculative. Now, when people want to hold money in their hand, it's called demand for money. And these are the 3 reasons why people hold money. Transaction motive. People want to hold money in order to make payments, do transactions that are needed at any point in time. For instance, if you want to hold money so that you can buy food, can buy clothes and all. These are the transactions motive or transactional motive. The second is the precautionary motive. We hold money to cater for unforeseen contingencies. You don't know what will happen. Maybe you get sick or something, or maybe a family member of yours will be in need. So sometimes you want to hold some money on you to cater for this unforeseen contingency. And the last is speculative or asset motives. We want to sometimes hold money in order to be able to take advantage of any investment opportunity. Maybe you realize interest rates are likely to go high, so you want to hold some money on you so that the moment interest rates are high, you invest it in a bill or a bond. So these are the major purposes of holding money. The next thing we want to talk about is a bank. What is a bank? A bank can be defined as a financial institution that plays an intermediary role by accepting deposits and channeling those deposits into loans and other lending activities. So that is a bank. A bank accepts deposits, and that is the savings of people, and then they channel the deposits into loans and other lending activities. So more or less, a bank is a middleman between a lender and a borrower, right? So what are some of the functions of the banks? The main bank of most countries is the central bank. In Ghana, it's called the Bank of Ghana. In other countries, instead of they calling the central bank, it's called the Federal Reserve. Okay, so what are some of the functions of the central bank? They are responsible for issuance and withdrawal of currencies. So if there's a new currency that's supposed to be issued, it is the sole responsibility of the central bank to ensure that that is done. And also they withdraw currencies. You know, money is a commodity that must be scarce. So if the currency is getting is becoming abundant in the country, they use some strategies to withdraw the currency from the country, from the hands of the inhabitants of the country. Also, if there is a issuance of a new currency, the old currency must be withdrawn. They use some strategies to withdraw it. Okay, the central bank is as well the banker, agent, and advisor of the government. So if the government wants a loan, it goes to the central bank for loan. If the government wants some kinds of transactions to be done, the central bank can stand in for the bank. And the central bank can also advise the government on what to do in order to most central banks, their main objective is to ensure that there is economic stability. That is, the economy is experiencing economic growth, as well the economy is experiencing stability in inflation and others. So they advise governments as to what to do. So that is also another function. And the third is the central bank is the bank of banks. So you know, a bank is a financial institution that gives loans and also accept deposits. So the central bank gives loans to banks. It's actually a bank that works for other banks. Assuming banks are individuals like us, and we go to banks to perform. Apart from putting our money there, we go to clear checks and others. The central bank does that also for banks. So it's a banker's bank. And the fourth is a lender of last resort. So if banks borrow from their colleague banks, but if their hopes are lost, they rely on the central bank as the lender. So it's the lender of last resort. And fifthly, the central bank is the clearing agent in a country. I can give you a check. The check is an Ecobank check, but you can go to Access Bank and withdraw the money from it, though the check is not an Access Bank check. Why? The central bank helps in clearing. This check you have given, it will go through an intermediary or a subsidiary of the central bank that will ensure that there is communication between the two banks for the payment to be done. So the central bank is a clearing agent. And the last is the central bank manages foreign exchange. So the currency of other countries, the central bank has a department that stores the currencies of other countries. So if you need US dollar, the central bank has a unit that has US dollar, that has euro, and all others. So it manages the foreign exchange to ensure that the need of people are met when they need some foreign currency to do some transactions. And in managing that, they also ensure that it helps to stabilize the local currency. Right. So the last, I think this is the last thing we want to look at is the functions of other banks. We've talked about the central bank. What about commercial banks and other banks in the country? They accept deposits. If you have a bank account, I believe you have been making deposit there. So they accept deposits, and also they lend money. They lend money. If you need a loan, you go to a bank and the bank will lend you money. Actually, the money they lend you is the deposit people have made with them. If you don't know, I'm telling you today. Okay, the third is it is the agency to it performs agency functions to clients. So the central bank, the other banks, your bank can stand in as an agent to you to perform some functions. Now banks are even agents of insurance. Instead of you going to an insurance company, the bank can stand in to insure you. They have gone into partnership with insurance companies, and they offer other services apart from lending and borrowing now. So they perform a lot of agency functions to their customers or their clients. And fourth, they act as guarantors for clients. Okay, so you might be a customer of a bank, you need money to buy some commodities, but you don't have enough money. The bank might also not want to give you a loan. The bank can speak with your supplier, the person who is supposed to, or the company who is supposed to supply you with the commodity you need. And what happens is that the bank will stand in as a guarantor, telling the supplier, give him the commodity. He'll pay in 2 months' time. Just in case he doesn't pay, we will pay you and take our money from him. So that is also another function. And also the banks perform advisory services to clients. Your bank can advise you as to how to invest your funds, put it in this investment, or how to even manage your business. So that is also one function of banks. And the last is they discount bills of exchange. The banks they sell treasury bills to customers, and also they have products like fixed deposit and other savings products they sell to customers for customers to earn much value from the money they put in those banks. Alright, so these are the functions of banks. It brings us to the end of today's lesson. I'll stand by if you have any question. I would be very glad to give you an answer. I believe you enjoyed the class. Have a wonderful time. Bye bye.